I wanted to talk to you about investor mindset in today's real estate market.
I think there's an element of fear still out there.
So when it comes to strategies for investors in this today's market with the financial ups and downs we're seeing, what are your thoughts there, Martin?
The great thing I love about a real estate investment in particular is that it doesn't have to be a one-size-fits-all.
Exactly. Interest rate is something that you can't control and which can always fluctuate. But you have to control the numbers that you can control and focus on how you can upgrade that.
To let people know it's not just a one variable type investment. You have to look at all of them together.
Look at it all together. That's true. You heard it before. 90% of millionaires become so through real estate. But let me ask you this. Are you sitting on the sidelines or playing offense in today's market? Because while most are stuck in fear, headlines and hesitation, smart investors, they're doubling down, adopting and building serious wealth. In this episode, we are breaking down how today's most strategic real estate investors are not just surviving 2025, they are thriving. And joining me is none other than Martin Kuev, former Fortune 500 exec turned powerhouse investor, the man behind MK Properties and the co-founder of the Vaughan Investors Club. This isn't just another market update. It's your playbook to scaling smarter, faster, and stronger in today's real estate market. Thank you, Martin, for joining us today.
No problem. Glad to be here.
Amazing. I wanted to talk to you about investor mindset in today's real estate market. What are your thoughts there?
We just still came out of the pandemic, and there's still the reminiscence of the rate cuts and what does this actually do with the overall market moving forward. So I think there's an element of fear still out there.
Yes.
And there's still, from an investing standpoint, money I'm still keeping close to my chest. I'm not sure if I'm ready to take that leap. However, from the true investor mindset, the ones that see the opportunities, the numbers speak for themselves, and it comes down to the numbers. And hopefully we try to keep emotion out of our decisions, and the numbers are starting to look better. They're looking really good from a cash flow perspective. What you can purchase homes at, all the numbers and all the variables around those numbers are looking quite healthy. And it comes down to investors, and once they see that opportunity, will they take action? And I know, going back several years, we run an investment meetup, and we have a lot of people coming in and saying, I'm just waiting for the market to drop, for the market to go down.
Yes.
And typically, I'd say from a percentage standpoint, out of every 10, maybe 1 or 2 actually do that when the market drops because fear comes in.
Yes.
The market drops, you fear it's going to continue to drop. And for us, we look at the numbers, we look at exactly what we're looking at from the economic standpoint, and it's still a massive opportunity out there. From a buying perspective, it is a buyer's market, but there is still a bit of apprehension in terms of investors. And I guess taking the next step.
Yeah, understand. And what is the effect that has when it comes to like financial shifts and the global economy and what we are seeing with trades and things like that at this time?
It's a loaded question there. With I guess the best term for that is uncertainty right now. We still don't know. It's looking good in terms of discussions now between Canada and the US, but it's still a bit uncertain in terms of what tariffs are actually going to do, and Trump hasn't walked away from the tariffs still. So what we're looking at that going, it could be inflationary, it could be recessionary.
Yes.
And reflationary or recessionary, one of those is interest rates going up, one of those interest rates going down. So we don't know where that's going to turn out, and how is interest rates going to go up or down. From an investment standpoint, interest rates are very important to us because they dictate how much cash flow we can have. So if they continue to go up, it's going to be tough. And we'll be back to kind of where we were in 2022. If they continue to go down, unfortunately, we'll be in a recessionary time frame where employment is going to be an issue.
Yes.
But the buying opportunities will still be there. So for the astute investors, then you're going to have lower interest rates, and the buying opportunities are likely just going to get better. And we're still in that process of going down. Regardless of tariffs, we still have a trajectory of dropping the interest rates more for the course of 2025.
That's what I've been hearing too. So let me ask you this. So if in an investor standpoint, Martin, like the goal is to buy and hold when it comes to real estate, right?
For some people, it depends on your goals. Your goals could be cash flow. Your goals could be, I typically more about building long-term wealth, so it's buy and hold.
Buy and hold. So when it comes to strategies for investors in this today's market with the financial ups and downs we're seeing, what are your thoughts there, Martin?
Good question on strategies. Strategies are not a one-size-fits-all, especially with real estate investment. It's one of those things that we always ask investors, what is your goals?
Yeah.
And there's something within real estate investment that should match your goals. Some investors want to be active and manage their properties. Some want to be passive and not deal with it. Some want cash flow. Some want long-term wealth.
Yes.
There's different strategies that you can do. There's wholesaling. There's flipping, more from an income standpoint, or there's the burst strategy or buy and hold, which is typically what we do.
Yeah.
Or you can go into development or joint venture.
Yeah.
And those are more long-term strategies. And they have a degree of active versus passiveness. But the strategy just comes down to the investor and what the goals they have.
And what they want to achieve at the end, right?
Correct.
That's true. So for investors in today's current real estate market, what do you see is working best in their interest? Like what strategies is more like being used at this time?
Right now, I think it kind of goes down to investing 101 cash flow. And most of them are looking to protect that investment. And cash flow is your best risk mitigator. So I'd say several years ago, if you have a great job and interest rates are going to continue to go down, then maybe you could have tinkering on the cash flow. But I think most investors right now, you need the security. And you have this security that probably the biggest thing they're looking at is cash flow.
Yeah.
And what's my cash flow today and what's my cash flow going to be tomorrow?
Yeah, that's true. That's true. And when it comes to the power of off-market, value-add or renovation-based investing, what do you see in today's market right now?
I think of all the properties we bought and sold, I think I bought half on-market, half off-market. So it's not a matter of on-market or off-market, it's a matter of the financials. So everything comes to the financials. If you can find that home run in a foreclosure or motivated seller or a power of sale, great, you can make great money on that buy.
Yeah.
How we invest in real estate is more scalable. Like there's a lot of great opportunities still in the MLS, but it comes down to the numbers. You have to run the numbers, and it's not about looking at the numbers like the interest rates high today.
Yes.
I don't look at the interest rate in isolation. In 1980, they were investing with 20% interest rates. So you have to look at the interest rate, the rents, what's the purchase price, how are those all tied together? That's going to give you a clear picture because essentially you're buying a business in a box.
Exactly. Interest rate is something that you can't control, which can always fluctuate. But you have to control the numbers that you can control and focus on how you can upgrade that, right?
But some people make decisions based on just that one variable. Or the home prices went up this year, so I can't purchase. Or the interest rate is this much. And I just try to let people know it's not just a one variable type investment. You have to look at all of them together.
Look at it all together. That's true. I've been hearing a lot about multi-unit investing. What's your thoughts there? What's your experience there in today's market?
There's a saying, and as an investor, you make your money in single family and you park your money in multifamily. And I'd say that's probably true for me as well.
Okay.
The main difference is from a lending standpoint. When I quit my job, banks didn't like me after that. So it was much easier to get a loan in a large multifamily building than it was on my own single family or a personal residence.
Yes.
So from a lending landscape, it's great. And then how they're valued. So how banks, you're working with a commercial division, typically it's 5 units or above, and they're valuing that property based on income and financials. Where a single family home or a residential home less than 5 units, they're valued on what is that home across the street or what's the comparables around here.
Yeah.
And I'd rather work with the numbers, obviously. And I have much more control in the numbers because multifamily gives you a multiplier effect. I know that I can spend a little bit in renovations and it's going to increase my value of my building much, much more than it would on a single family home where I may get a little bit of uptick in terms of how much renovations that I had.
Yes.
So it basically just comes down to you probably will want to eventually get up to multifamily. It's sometimes a psychological barrier, but they're essentially the same. It's you're doing it on a larger scale. You may have environmental, you may have to do more of inspection up front in your due diligence. But from a grand scheme of things, you're buying a property, you're renovating it, and you're renting it out.
Yes, yeah. No, I say that. And there's a lot of buzz about the program the government announced as well. The CMLI. Like, what is that doing right now? What are the goals there for investors?
Great point.
Yeah.
When you're on MLI Select, you have the opportunity to have much more leverage from the bank, and it's utilizing as little of your own, but understanding that the banks are only going to loan to their risk level.
Yes.
And the MLI Select is a great program for us because they understand what real estate can do and what it can do in the long term. And from us, it makes our cash flow better. It makes our purchase price better. It makes all those things work much, much better than if you have to go to conventional loan.
Yes.
Now, they're a little bit more stringent, and you have to have the insurance aspect on it. That's usually tacked onto your mortgage and you're paid at the end, not an upfront fee.
Yeah.
So from a numbers standpoint, from a cash flow standpoint, that program is great.
It's great. Amazing. I mean, and do you see that is more actively being used at this time?
It is. Once they launched it, it was a lot more interest. And I've been on the phone with CMHC and a few times, and it's getting a bit competitive now sometimes because sometimes they won't accept all of them.
Oh.
So depending on what type it is, there's some MLI programs, some are around construction and just developing those, some are around acquisition. But sometimes it's tough. The one on construction, for example, I was sitting on a call and there's a waiting list basically to get
in there. Oh, wow. That's amazing. When it comes to playing the offense with smart planning and partner alignment, like when it comes to investment, like it's not always that you can do it on your own. Like if the investment part comes to a question, so coming up with creative strategies like partnering or like looking at other allies, what do you see happening right now?
Well, it comes down to the people's goals, but I do see a lot more partnerships happening. Just because capital is more, you need more capital to invest, or you may not have the disposable capital that you had before, or that was available in previous generations. So partnering up allows two people to come in and buy property together. I always caution that in terms of not, it's a bad thing to do, but have those discussions, put everything down on paper.
Yes.
Because anything that you do, who knows what's going to happen later on. Now, I've been in those situations, basically, I have a motto now is I want to date before I get married, in essence. And if you're buying a property together, you're kind of getting married in a way.
Yeah.
So you want to have those conversations in terms of what, if something does happen, how do we go about that? But from a purely investment standpoint, it allows you to get the market if you do partner with somebody. However, there's options out there that you don't need to partner with anybody. You can do fractional buying as well and buy a portion of it. Or buy REITs or buy something on the market. You may have to have lower returns, but because there's a lot more management fees around that. But for the ones in terms of how we invest in syndications and partnerships and joint venture possibilities, you can get a much higher return. But if you're partnering up, then you're basically 1, 2, 3, 4, 5 people on a property. You have to manage who's going to be managing it. Who's the responsibilities? How much capital is coming in? What's the value of all those? Who's going to go on the mortgage? There's a lot of questions around that. But for sure, from a financial point of view, it can help you go that one extra step.
Definitely. So like if you're thinking about investing or getting into investing or partnering in investing, always sit down and talk your goals through. And maybe get some advice from experts like yourself, Martin, to have that guidance over like what to expect. And if you were to expect something that unforeseen, what should be the next steps?
Yeah, we always have them do a consultation or some sort of discussion at the beginning. Some are just raring to go. If they come to one of our classes, I love real estate, this is fantastic, let's go into the market. We go, whoa, we'd like to find a little bit more about you. And it's not for the sake of we don't want to go out into the market, but we want to put them on the best path. And that best path could be dependent on what their job is, how qualifiable are they with the banks, which order do we want to go to the banks on? There's a very different order I'm going to go to the banks on if I want to buy 1 property or 5 properties. And then basically, do you want to buy 5 or 6 properties? Am I going to put in a corporation or am I going to put my own name? So those types of questions we ask them. And then they're going to make the decision. We just advise them on, you should make these decisions up front because they're going to be hard to do once you have several properties.
Exactly. No, that's true. That's amazing. Thanks for sharing that. I want to talk about abundance thinking, especially in today's economy and market that we're in. So why do you think abundance thinking separates the wealthy from the people who are worried at this time?
Great question. I think most people are worried about what can go wrong, where as I became an entrepreneur, it's looking at what the upside is. It's from a human mindset standpoint it's much easier for me to talk myself out of something than to talk myself into something.
That's true.
And there's a quote that I kind of had when I became an entrepreneur, and it's Richard Carlson, not Richard Cranston. And he put a quote out there, you know that saying about if it's too good to be true, it probably is? And there's a saying around that, if it's too good to be true, it probably is. That quote in itself causes suspicion and doubt and things that people are making decisions off of something that they may not have all the information on. So when I'm looking now, I look at, hey, this may sound too good to be true, but the upside is very, very good. You got 5 minutes of my time. You got 10 minutes of my time. I may want to sit down and learn about it. I want to validate if it's not the right thing to do. Most people within real estate, especially when I started out, they may have had a bad experience. They may have had the recession in the early 90s. And they're like, real estate's terrible. And it's basically, it comes down to the lens that you look at these opportunities. So from an abundance standpoint, there's a tremendous amount of opportunities out there.
Yes.
But people are where we love schedule. And we love to get on the schedule, and that drives us and allows us to continue every single day. But breaking that and getting outside of our comfort zone, that's where the abundance will play in. But it is a mindset thing for sure.
Most definitely. Thanks for saying that, because that's very important, especially like if you're trying to play the investing game in today's economy. Most definitely. And I have heard about lending programs and then equity investing. What's the difference? And which, like in your opinion, which way is better right now to focus on, and why is that?
Equity versus just straight lending?
Yeah.
Well, lending is just a debt. So I'm going to get my certain percentage of interest, and I'm going to get that interest. Equity, you're tied to the property. So you have much, much more upside potential. And probably from a lending side, you have more assurances on your capital and what you have, and you're secured in terms of if something goes wrong, you can take over the property, but you're basically tied into, I'm going to have this certain interest rate. I think it comes down to the investor and what lens are they looking at. If they want steady income, they probably want to be a debt lender. And I've done that as well. A lot of investors become private lenders. And if they have capital sitting, rather than try to put it into a bank where you're going to get 1 or 2%, you can go and loan to a real estate investor or go call a mortgage broker. They probably have a lot of interest in private funds. And you're going to get upwards double digits probably.
That's true. That's true.
But equity, you're going to have much more upside because you're tied to the property. But you're carrying more risk as well on that.
That's true. It's a good eye opener, because sometimes when you have the cash that you want to play with, this understanding which way that you want to go, what suits your needs better, is something that they need to focus on. Most definitely. So to scale in investing in 2025. What are some of the tools and ideas or information that somebody should enrich themselves with?
I'd say number one is mindset first, because if you want to scale, most people get stuck after that first property, or how do I get to the next property?
Yes.
And that's where it comes down to looking at real estate and the drivers of wealth, and that's equity, and understanding your equity and knowing that when the property value goes up, you can go straight back to the bank and always pull your money out. So we always have a saying that I never want to have my money sitting. I always want to have my money working. So as the property value goes up, the bank only needs 20% of that to maintain their risk threshold. So once I get to a certain point and I want to start scaling, I have access to capital. The biggest thing as an investor, especially if you get to multifamily apartment buildings, is access to capital. And that's going to be your biggest hurdle, probably, is no matter how small or large you are. You're always going to, no matter how much personal funds you have, you're going to hit the end of the runway eventually. And getting access to that capital, sometimes you can get it yourself. And a lot of people just don't realize that their homes and their equity they have in their homes is massive capital for them to allow to build that out. Especially if it's your own home. If your own home, there's a psychological barrier because it allows me to sleep better at night. If I have that no mortgage on that, if I pay it off. But from a financial perspective, you probably can go a lot further. And that's how I started out. I started out quitting my job and taking the equity out of my own home. And it was something that my wife didn't understand. There had to be a learning curve there for sure. But ultimately it was the right decision for me to make. And financially it would be something I would do day in, day out for sure. So from scalability standpoint, it's utilizing what do you have yourself. Sometimes it's the equity in your own home. But once you have several properties, then you could scale quite big. It's the first few that are the hardest. But you can scale. I think that's the way people look at it. What can they scale with what they currently have? And the second part is it could be other people's money. It could be partners and whatnot. But it comes down to the capital. How are you going to get the capital? Is it going to be through yourself, or it could be through other means?
And then having that long-term plan as to how you're going to continue to build on that is a game changer, most definitely. Martin, thank you so much for taking the time today to join me and explore these options and questions with me. This is very valuable information for today's investor to see how they can scale in 2025. I appreciate your time.
Thanks for having me.
And there you have it, proof that even in times of uncertainty, strategy wins over fear every single time. A massive thank you to Martin Kuev for bringing the heat and sharing insights that every investor newer season needs to hear. If today's episode lit a fire under you, don't let it stop here. Take action, review your goals, rework your plan, and remember, the market doesn't wait for hesitation. It rewards bold, educated moves. If you got value from this episode, share it with a fellow investor or someone who's been stuck on the sidelines. And hey, don't forget to subscribe, leave a review, and follow us for more real talk on building wealth through real estate. Until next time, I'm Stella Ram, reminding you your next level starts with your next move. Stay bold, stay invested, and stay inspired. I'll see you next time. Thank you for spending your time with us on the Stella Talk Show. We hope you found value in today's episode and gained insights to help elevate your lifestyle. If you enjoyed the discussion, please like, subscribe, and share it with anyone who could benefit. It means the world to us. Until our next episode, stay inspired, and I'll see you soon on our next Stella Talk Show.